Hey guys, welcome back. Okay, so in our previous episode, we talked about the sessions and all of that. Okay, so most of you were just doing things blindly, and I've got some people that were lucky. I'm going to say you were lucky because you had no idea of what you were doing. I told you take time, study how this thing works. There's still more to it. You don't understand. There are lots of information for the previous episode I dropped that you don't understand. So people started trading with live phones because it started working. But honestly, it doesn't work on every page. That's why I urge you guys to study it very well. But today we're going to be looking at another side of it, another aspect that's going to give us a better view of how to trade the sessions. Okay, so the sessions is not just going about because I said you look for the first high or the first low and start looking for liquidity hunt. Then after a liquidity hunt, you start jumping into the market when you see the model. The market deceives if you understand that. And if you do that way, you lose a lot of money to the market. I started that way, and I'm telling you that you need to brace yourself with bias. When we talk about bias, we're going to talk about market structure and all of that. But today we're going to mainly talking about market structure. Okay, I'm going to mainly talking about market structure. Market structure is important and not all that important. Why I say it's important because there's another kind of bias, another kind of way of knowing your bias. When I'm talking about bias, I mean the weekly, the the daily. Because when you know where your direction, what like you know when you know the direction of where price is going to, like or you have an assumption, presumption, or a clue as to where price is going to before the end of that day, then you know where to brace yourself. You know whether you're looking for liquidities and you are looking for buy side liquidities, whether you're looking for sell side liquidities. Because honestly, you might be in a very strong downtrend for the meantime, and we happen to have a buy side liquidity. So when we talk about market structure and bias, is we are talking about buy side liquidities and sell side liquidities. Okay? So if your market structure is telling you that we are supposed to be heading up or we are in a downtrend or an uptrend, with your sessions, you need to know where to look for liquidity hunt. You might have a very strong downtrend, and when price open at the midnight session or at the AM session or the PM session, you know that since it's a downtrend, you're waiting for price to hunt buy side liquidity first. Then you see the model, then you short the coin, right? But what some of you were doing today, of which you sent screenshot to me, I was very um, um disappointed. We were in a downtrend. You don't know the market structure, you don't know our buyers, and most of you were looking for sell side liquidities to long. And some people got taken out by the 9:45 p.m. New York Session News Friday. Some people got taken out, and they showed me. And when you showed me what you got, when you showed me your loss, like I told you, I'm not prompting anybody to press any button. This channel is for educational purpose, and I'm teaching you to go and study. If you decide to press any button, it's out of your own decision, your choice, not me, not mine. Because you don't have the full knowledge of this yet. If you feel that you are invisible, you know because you've already gotten episode 1 and 2 of the course. The episode is long. Share the videos to motivate me to keep doing more. If I'm not seeing any engagement, any improvement, trust me, I'll keep delaying for you guys. But if I see the engagement coming in, then I'll keep making the videos and I'll keep teaching everything I need to teach. I'm supposed to teach. Okay. So looking at the diagram on the chart, yeah, it's a kind of a clear picture of a of an uptrend. Okay, so most of you, I know, you learned that an uptrend should be something like this, and something like this. Okay, where price is taking out higher highs, creating higher highs and higher lows. This is a myth. When you're talking of an uptrend, and you're looking at this diagram on the left hand side, this is a myth, it's an illusion. This doesn't work on the chart because the chart is fractal and it doesn't work on straight lines like this. So when you are using this kind of idea, you're taking this kind of idea to the real chart data, you get confused of which low is a break of structure, or which high is a break of structure, or which low is a change of character, and all those things. And we're talking about that SMC terms of BOS and change of character for those who don't understand. But for now, we are talking about break of highs and break of lows. Okay, so if you know you should know of internal highs and internal lows, right? When market is moving upward or downward, there are what we call internal highs and internal lows. Those internal highs, some people will mark this zone at this particular point as it was a change of character or a coach and all of that things, marking coach everywhere, dating their chart with different annotations. That doesn't work. Okay, so well, once you are talking about market structure, I mainly look at the 4 hours to 1 hour time frame. Okay, I know what I use 4 hours for market structure. I use 1 hour for daily drawn liquidity. I know why I use all those different times, and I use my daily time frame for buyers. Okay, why I use the 4 hours? Because it contains lots of data. I'm not using it to trade. I'm using it to know my trend for the past few days. I'm not drawing trend lines to say, oh, because price have been in a very long trend line, or this is a flat pattern, or this is a pull pattern, or whatsoever. Whatever is going to happen yesterday, we're going to reach here, I'm going to short. This is a myth. If you think it's because of this trend line that price is doing this thing, when it comes, it bounces on the trend line and goes off again and all of this, you are still thinking this way of this trend line. You don't know what you're doing in the chart. Okay, what is behind these trend lines? What are behind this trend line? Have you reason why price came back and had to stop at a particular point before going back? So we need to understand what these internal highs and internal lows are. Okay, so when price leaves, and once price is leaving for a trend, it creates multiple highs. It could be multiple lows. It could be 3, 2, 4, whatsoever. When price is retracing or pulling back, whatsoever, you are expecting price to take out the first or nearest or any low. You are using the edge at this particular point. The edge is what, like the edge is where you are looking for a change of trend. If price should by any means break this edge, then there's no need for price to go up again. Price has now changed character at this particular point because price have broken the edge. But when price breaks this internal low, price have collected social liquidity. That's what inducement. Price have taken out inducement. What happens next is price going upward. So the mistake people do is using this market structure to trade. I use market structure to know my direction, and I use the sessions to trade. Okay, so most of you use market structure because price have taken inducement. You start looking for entries here, or you draw trend line and start looking for entries. That's some of the mistake you guys are doing. So it might be favorable for most of you, but it's not favorable for me. I don't like it. It doesn't work. So once price takes an inducement, what happens? Price hunts for what? Buy side liquidity. Price takes an inducement, hunts for buy side liquidity. You see price coming, leaving another low, another internal low. Sometimes there can be multiple lows, but once price takes out a low at this particular zone, there's a kind of structure. This is going to be a video for another day. At this particular zone, once price takes out this low, there's kind of a structure I'm looking for here on the lower time frame. There's something I'm looking for to see on the lower time frame for it to clarify me that price is ready to do what? To help hunt for sell side liquidity, or if price is ready to keep going down to hunt for this liquidity. And trust me, this is what is happening currently on the chart now. I'm going to outline that. I'm going to talk about that. So price takes us sell side liquidity and hunts for what? Buy side liquidity, leaving a what? Another internal low. Once price is coming back, you are not marking here as your coach. That's the mistake most of you do. I see it on people chart every time. They mark BOS coach, and all that. That thing doesn't make you profitable. No. Honestly, you should be honest with yourself. That thing doesn't make you profitable. Price can take out this inducement with a week. Okay, and what I mostly want to see here is in FVG. There's always, like 80% of the time, there's always an FVG here. Price takes out that inducement, taps into an FVG, form that pattern I'm talking about on the lower time frame, then go. That pattern we are going to look at it in the next or so. Your engagement, the more I see people sharing the video, the more I see more subscribers, more video likes, more video views. It will treat like, it motivates me to keep dropping these things for you guys, so we can be done with the course and so you can start studying fully and start trading. Okay, I've taken months to study this thing. Trust me, if you see my notes alone, you understand that this is not something you joke with. Okay, it's not something you joke with. Okay, so there's always a fair value gap, an imbalance at this zone where price taps into on the market structure time frame. Okay, where price taps into, it can be a week or whatsoever, but there's always something there. Imbalance, not other block. Imbalance, not rally base rally or whatever. There's always an imbalance there where price taps into. Then come again, tapping. Could be a week also, but at least price is taking what? A low. And when price taps into the imbalance, you don't just go about and start placing orders. There's something I want to see on the lower time frame. I'm going to make it in another video. I don't know when, which episode, but I'm going to make it another video. It's something on the lower time frame price taps into that confirms that it's ready to long. I know that it's ready to long. Okay, so when once price breaks this low, know that inducement is taken. You want to see price tap into an FVG and you want to see that confirmation. I'm not going to do that in this video, but I'll do that in the next video. I'll say that. So you can go and study it. What happens there on the lower time frame? I'm not telling you the time frame. That will be another video. You can go and study what happens there that's making price to do what. Study the module very well to better understand it. Now price breaks this words, this low. This is our high. Price takes out what? Sell side liquidity. Once price takes out sell side liquidity, it runs for what? For buy side liquidity. And you should understand this. You can write it down on your notes. But once price refills an imbalance, price runs for liquidity. Once price refills an imbalance, price runs for liquidity. You should know that price came back, refill this imbalance, run for sell side liquidity. Came back, refill this imbalance here, taking out inducement, run for sell side liquidity, buy side liquidity. Price did the same thing, took out this inducement, refill the imbalance that could be residing here, and did what? Run for buy side liquidity. So once price refills an imbalance, it runs for liquidities. Okay, it runs for liquidities. So the same thing applicable here. This is just the trend going. So when once you are looking for sessions to trade, you should know what liquidity, which aspect of liquidity, buy side liquidity or sell side liquidity, you want price to take out first, or you want price to take out before you actually before you start looking for any module to short or long. Price doesn't take out the liquidity that correlates with the market structure or the bias or the trend. They are doing another thing entirely. Alright, they're doing another thing entirely. Price took out this low. There's a possible imbalance there. Price taps into there. This, you can see this mostly on the 4 hours time. Whatever pair you're using. Okay, so price leaves after refilling the imbalance. It leaves again for what? For the buy side liquidity there, leaving this internal low. Price come back again, takes it out. Okay, it refills the FVG that's there, the imbalance that's there, form that particular pattern I was talking about on the lower time frame. Then you can decide if it's ready to go or not. If not, if there's nothing there telling me that price is ready to reverse or not, what happens? Price does what? Keep dropping. Once price keeps dropping and breaks this structure, this extreme edge. Once price keeps dropping and breaks this extreme edge, then you can now say this is your what? Your change of character. This is your change of trend. Price have finally changed trend. And believe me, there's going to be another internal high here that price will come back, take out, and and continue the trend. You understand? Take out like that, just like the same thing that happened here. Alright. Okay, so we are going to go to the real chart, right, and see these things. It actually work. Okay, so these are real charts. This is the 4 hour time frame. You can see where I label this. You can see where I label these colors: blue and red, blue and red, blue and red. So you can see what happened here. You can see price was coming from a down, and price is in a downtrend currently now at this kind of, you know what's a down, sorry, price is in an uptrend. You know what an uptrend is, where price keeps breaking higher highs. So you see price creating this high, this swing high, leaving what you see, there's an internal low here. Hope you can see that there's an internal low here. Price took out that low. Price took out that low, tap into this FVG that's here, then do what? Run for buy side liquidity. You can see what I was trying to say. Okay, so after running for buy side liquidity, it left what? Another. Okay, so you can see this other move created here. Price left what? Low, an internal low, before breaking this high. Leaving that internal low, it acts as what? Inducement. There's still more. I'm still going to make more videos about this, and I'm not expecting you to understand this and just watching this video for the first time. You can watch this video, take down notes as many times as you want, so that you can actually understand them. Okay, like I said, it can be just a week. You can see that week tapping into this FVG, yeah, into that imbalance. Then you can see that we're tapping into that imbalance. Then you can see price taps into there. There's a kind of pattern that forms on the lower time frame that tells me, or that makes me understand that price is ready to what? To go up. So looking at this other high, you can see price created as it ran for this buy side liquidity. Price paused at a time, created created an internal low before breaking. Right, that internal low is serving as what? Liquidity. What we see next is price coming down. See, price, as price was coming down, it's creating another internal high. So should there be any case where price breaks this low, low, you can see where my blue marker is, right? This blue marker is telling me that that is the edge I want to see broken. That edge I want to see broken before I can finally conclude that price have changed trend. You can see that edge is not broken yet, right? That edge is not broken yet, and in this case there's no FVG here. Okay, there's no FVG here. There's a weak zone. I'm going to talk about that later in another video, but for in this case price have taken an inducement. Price have taken this inducement. The confluence I want to see is the inducement and tapping into an FVG. But in this case there's no tapping into an FVG. There's only price taking an inducement. So price taps into this weak zone. I'll talk about that weak zone later. But it breaks an inducement here. It breaks this inner or internal low, whatever I want to call it. I'm waiting for a particular pattern here on the lower time frame. If it forms there, then it's telling me that price is ready to do what? To run for sell side and for this buy side liquidity. But if price should not give me any pattern there and breaks this low, then I'll finally conclude that price have changed trend. Okay, price change trend. Then what next I'll be seeing is price taking out what internal high, breaking this high, tapping into that FVG. You can see that FVG there before running for sell side liquidity. I hope you can see that FVG there, very clear, nice and clean. So that will be my POI if price should break this low. But should price not break this low, forms that pattern I'm looking for, then we are running for the sell side liquidities. But if it breaks this low, we've changed trend. Alright. So this is market structure you need to understand. So when you understand this particular aspect of market structure, whatever coin you're trading, whatever asset you're trading with the sessions on episode 2 makes really more sense. Okay, it makes more sense because at this particular time, you can say that this intersection of days, all of this is intersection of days and weeks. Okay, so what happens is that in a particular day, you could be okay. This is December 16, right? Where we were somewhere here at the opening of today, we were somewhere here at this top here. Since there is an inducement here, right? You know what you're looking for. Until price takes out that inducement, you're not supposed to be longing any coin on the lower time frame. That's the intraday strategy. The 15-minute, 5-minute, and whatsoever. Since we are in a downtrend, or we are looking for price is seeking for this inducement, this low, and we are coming down here somewhere like this, and we are somewhere here for the day, or the day opens somewhere here, and at some point price then at some point, whether at the opening or AM session or PM session, price ran for sell side liquidities and show you a pattern to long, and you want to long, you surely be taken out. You certainly be taken out, because what you are not following according to what market structure is telling you, or the trend is telling you. Okay, the trend is telling you this market structure. This, when I opened my chart today, we were somewhere at this December 16. I think we were here. Yes, that was where we are. And that candle. Let me close that. Okay, so that was our candle. That was where we were at the opening. So when I opened my chart today, I saw this market structure build up. I already had it marked up, and I knew that price was running for this inducement. If price should break this other low, change trend, then I think in the morning, at the opening session, price first seeked out sell side liquidities. When he seeked out sell side liquidities, kind of give a pattern, and many guys I on WhatsApp were entering the trades. I saw many people drop their screenshot to me. You are dropping your screenshot to me as what? That the pattern doesn't work, the strategy doesn't work, or what? I told you don't trade with knife forms. You don't understand this particular pattern or this particular strategy very well. There's still a lot more you need to learn or know about this. Okay, so most of you just jumped in and started longing the coin, but clearly I know what I was looking for. I knew where price was going to. So this kind of my AOI, my area of interest. This is my area of interest. This is where I wanted price to go. That's why you see most of the time you see me calling particular zone in price. I say I want to see price looking for this zone, and before you know, price start looking for that zone. So at this particular point, I don't want to see price looking for sell side liquidity and start looking for movement. Price hunts for sell side liquidity first, but later hunted for what? Buy side liquidities. After running above highs on the 15-minute, 5-minute time frame for today, intraday strategy for today. Go back and watch the previous course, the previous episode, sorry, if you don't understand what I'm talking about, the sessions. After price ran above the buy side liquidities, because I was looking for opportunity to short. I saw the module and I was like, okay, fine, this is a perfect opportunity to short. I shorted the coin to this zone. This is the zone I want to see. I say I don't like keeping my trades for more than 2 hours. So I had my entry targets, where I take profit on the lower time frames. Okay. It came again, it happened again at the morning session. Morning session, I think price ran for buy side liquidities and gave the module. The module is kind of invisible. The module that happened today, that mostly happens today, is kind of invisible. You don't know that module yet. Yes, you wait for that module, but do not see any return to FVG. I think this is what price did. Okay, this 5-minute time frame. I don't want to get your attention here. This 5-minute time frame here. Okay, so what price did was price took out buy side liquidities. You can see here. I was waiting for this at this session. This morning session, price took out buy side liquidities, gave this module. Most of you be waiting for price to come back before shorting, but what the price did, price just kept going down. This particular module, you don't know it yet. Maybe as time goes on, I'm going to teach you why price do this and how to enter this kind of trades. Okay, but for now, I was expecting price to just keep on running above highs till it gets to this point. Okay, because that's what my market structure is telling me. When price get to this point, that's 168, which price later did today, getting to that point, which is this weak zone 168. Then you now start looking for patterns or modules that's going to give you the confluence to conclude that price is ready to long. If not, price breaks this If not, price breaks this other low and it becomes what? It becomes a change of character. So for now that price are not breaking this low, price are not giving us any kind of entry pattern yet, and there's no FVG here, I'm kind of having this feeling that price is going to break this low. Could be tomorrow, could be next 2 days, I don't know. Might have another consolidation here, maybe, I don't know. Okay, so this is the first aspect of market structure I want you to understand. And trust me, there are different kind of market structure you need to understand. They are not just uptrend, that trend. There's kind of market structure that happens on the chart that I think you guys call the symmetrical triangle, something like that. You guys call it symmetrical triangle. So that happens like this. It's a market structure to me. It forms like this. It forms like this on the chart, making causing causing smaller highs and smaller lows. This is also kind of another kind of chart pattern. Okay, sorry, not chart pattern, another kind of market structure. And once you understand how to trade this market structure, trust me, this happens almost every time on the chart. This market structure happens almost every time on the chart, whatever time frame. If you understand what is making the chart compress like this and how to trade it, you understand what I'm trying to say. You can see that's what happened here. That's what almost happened here. Where we're kind of consolidating. You can see that. You can see that zone. You can see that zone. That's another kind of market structure. The price breaks out and keep forming another kind of uptrend market structure. So understanding how the chart works is another kind of thing you need to study. It's another thing you need to put yourself into study. You don't just go looking for sessions to trade and all that. Trust me, you lose a lot of money if you do that. You need to understand where price is headed to. Daily draw liquidities too. I'll make a video for that. You understand daily draw liquidity. That one I use a 1 hour time frame. Price seeks out a particular low and hunts for high, or seeks out a particular high and runs for low. But it depends on what this time frame is telling you, the higher time frame is telling you, and also depends on what the daily time frame is telling you. The daily time frame is clearly for buyers. Okay, the daily time frame is clearly for buyers. Understanding all these single candles, how they react on the daily time frame, how they should be and all that. You trust me. You become invisible in the charts. I'm not promising you to understand this in a matter of 2 months or 1 week and start trading. This will take time. This will take time to build this amount of study, this amount of dedication, commitment. Pause trading for a while, start studying with your demo account. If you don't have a demo account, register on Maskex. Use the code 37LW1F. Register on Maskex. You'll be given a demo account. Demo account that works with real life price, live data. Okay. That's what I use most of the time to practice demo trading. And if you come to a point where you are good with your demo trading account, you can start using your live trading account. Don't just jump into live trading because of the urge to make money. You lose a lot of money. So I hope that this market structure class or lecture was really understandable. There are some things I might say that are out of line. Please forgive me for that. I just wanted you to understand clearly what I was trying, like using other things to picture what I'm trying to say. Okay. So if there's any other question you have, if there's any question you want to understand, or you feel confused about this, you can ask at the comment section of this video, or ask in the community. Then I'll make it, maybe answer them in the next videos. Okay. So go back, study hard, and try to get these things right. Until next time, be safe.